Greetings, Dr. Jeffrey Scott here, and this is my weekend market update for the week ending Sunday, March 16th, 2025. Email address, the old one, hgsidoc@gmail.com, works just fine, or the new one, marketmripro@gmail.com as well. Title this one, A Technical Bounce. Is this the end of the correction or setting up to be a bull trap? And I think it's an important question, one probably no one can answer except for time. And perhaps it's about how do you prepare for both? Again, my name is Jeffrey Scott. If you like these videos, thumbs up. If you're new to my channel, hit the subscribe, hit the alarm. You'll get notified when I do this. Even better, join my Google group, which I'll talk about in a few minutes. Let's start with the disclaimer. As always, this is for educational purposes only. Intent of the video is to demonstrate how I use different tools to do top-down analysis and apply them. This is not investment advice. Trading does involve risk. You and your are solely responsible for any investment decisions you make. I may own or intend to sell any stock mentioned in this report. I may go long, I may go short, I may do spreads. Trading stocks and options should be considered risky and should always consult with your financial advisors before making trades. And I have tools in multiple platforms. Today I'm going to be using my new Market MRI Pro tool. HGSI is where everything started. It's really the tool that Ian Woodward, my mentor, helped create, and much of what I do can be found inside there, and frankly at a very fair and reasonable cost. I've added a few things to what Ian taught me. I have my way of approaching the markets that may be a little different, but you can start with HGSI and you can be very happy. Wealth Charts, Rob Hoffman's extensive program that handles all kinds of trading from futures, prop trading to swing and position trading. I have some basic tools built in there, and then I have what's called a marketplace app, which is a paid-for tool. If you have interest, just reach out to me. TradeStation, I have apps and indicators. TradingView, I have indicators. Metastock, I'm really excited. It should be coming soon. And then what I'm going to talk with today or teach with today is my Market MRI Pro tool. If you're looking for my wealth charts video, don't worry. It'll be there, but it'll be there on Monday at 8:30 on stocksanddocs.com. In that video, I will concentrate on using wealth charts, so those folks that have bought my tools there won't feel like I'm neglecting them. Plus, I use that tool anyway, so you'll see how I use that to do my analysis. My Google group is called Top Down Trader. How do you join it? You just go to Google Groups. You have to sign in, I think, with a Google ID. You find my group by searching. You click how you want me to notify you and join. There is no cost. There is no upsell. I am not planning on charging anything. I use it to push these videos out every day. I do commentary every day. I do things that I don't post on YouTube, and I offer discounts on my tools to the people that are there. I will also do impromptu educational programs that I'll announce to my top-down trader group because, hey, I don't have a mailing list. I think a question that really matters is there a recession in our near future? So I have stuff here that I think is mixed. What am I talking about? So let me move some things around here so I can get at them. If you just give me a second, I'm moving my toolbar from my Snagit. Okay, so first thing we look at is the 10-3 month and the 10-2 year yield curves. And the thing that people talk about is the inversion, which occurs when it goes below the black line. If you go back to the 70s and you look at what happens after you cross over, you get a recession. Okay, the recession are the gray bands. This is the 10-3 months, and this is the 10-2. Notice that these recessions occur sometime after we cross back over. So I think if we just play the rule of odds, the odds would favor that we will have a recession. The other thing to point out is it's not unusual for especially the 10-3 month to revert back to a minus. And we've done it here. And why is that important? Because It looks like that gets closer to when we have the recession. So I have to put myself in the a recession is not out of the question camp. Just when? Why does it matter? Because if you've lived through bear markets, they're one thing. If you have a bear market in a secular um, recession, that bear market is a whole lot worse. And if you weren't around during the recessions in 2020 trading and 8 and 9, um, you will be experiencing something that is very painful if we get there. Now, going against the recession is the Philadelphia Fed Diffusion Index, manufacturing thing, 18.1 in February. Recessions usually occur when we're below minus 20. We have this coming out this week on the 20th. I'll be watching it closely. And then the other thing, and this one may be, and let me pull out a tool here. Let me just get something that'll do a straight line. If I do a line from here to here, let me see if I can do this. That might be an interesting trend line. And why is this important? Because 08, 09, and 2020 are when we had our recessions. And what are we looking at here? We are looking at a measurement of credit tightness. And, I don't want to overread, but we're coming right into that line. So break above this should be worrisome. Now, one could argue that the line should really be from here down, and we're really at that breakout point. So I'm going to be watching that. I don't know when we'll get the recession, but I guarantee you we will get a recession, whether it's in this near-term cycle or further out. And I am, I'm watching for it. I don't know how I prepare for something that could be months or years away. If it was imminent, I know how I would prepare, and I've been through some bears and recessions, and I raise cash early on and go to contra ETFs. But I'm waiting to see a recession. PPI and CPI came in softer than expected. Market seemed to yawn right through that. We'll see what the Fed says this week. Speaking of the Fed, this is my news and earnings. It comes from Market Watch on the left, Earnings Whispers on the right. Lots of news this week from retail sales, manufacturing, home building, housing starts, building permits, import price, industrial production, the ever popular Fed meeting on Wednesday. Fed Watch tool basically says there's no chance that they change the rates. I would agree with that, but will they even mention that inflation might be softening? Thursday, jobless claims in the Philadelphia Fed Manufacturing Survey. That's what I'm looking for. Home sales, leading indicators, but it's backwards. It's February. So there's a lot of news this week that can move the market. And then we still have a bunch of earnings. As it says in the lower right-hand corner, it is a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So we had an oversold bounce on Friday, very predictable. We've had a series of down weeks. People are digesting potentially slowing growth, tariff tantrum, and the craziness in D.C. At least Congress did pass a bill to avoid a shutdown, continuing resolution. This coming week, we got more data, but most important, we have a Fed meeting, a rate decision, and Powell press conference on Wednesday. I don't expect anything to happen on the rates, but I might hear that maybe the risk is tilting towards slowing economy and falling inflation, and maybe that will get the rate cut bulls excited. So most sectors were down, only the energy and utilities were up. Energy being oversold and utilities probably benefiting for a drop in rates. So I am in the camp of an oversold bounce in the midst of a downward moving market. I think that this market is going to fail at overhead resistance and head lower. But then I have to balance that with, yes, you can get V bottoms, although they're rare and more apt to fail. And then you have the O'Neill follow-through day, which is evidence of a bottoming process. And I'll keep an open mind that we may have set the lows, although I expect to head lower. So that first day that we could see a follow through day would be on the NASDAQ on Monday, and the S&P would be midweek based upon the rules. Not just because you get a follow through day doesn't mean the market's going to new highs. So my gestalt is we probably trade higher a little bit from here, and I'll show you the resistance and the concerns. And I'm not going to start shorting the market right here. I'd rather see it what it does. Does it move up, fail, and then give us another chance? And the other thing is, if you're sitting on some longs and we run up and we start to fail again, you might be able to sell them at a higher price. So let's go into the charts. So again, my wealth charts video will be on Stocks and Docs on Monday morning. Join my Google group. You won't have to worry about when I do these. I'll put it in your mailbox. And then I'm going to have a live session in June in Orange County. Seats are filling up fast. And then I'm looking at, trying to convince my buddy, John Person down here, to maybe do something at the end of the year or maybe in the middle of the year in Vegas. So that has not been settled. So more to follow on that. And let's get looking at the program. So one of the purposes of why I built Market MRI Pro was I wanted to consolidate what I do into one program. I wanted to develop a workflow that sped up my process, and I wanted to have the flexibility to add things whenever I wanted to improve. And Praveen, who is my programmer extraordinaire, has made that possible. So let's start with a view of Friday. Up here, you can see the one-day performance is pretty darn strong. The low was the diamonds at 1.6 and the Russell at 2.43%. Over here, we can see they all finished in the upper part of their range. That is bullish. Volatility was down 8.75, looking at the VXX. And if we look across, you could see that's at the low of the range. That's good. Next, we have NYSE and NASDAQ new high, new lows. We're still seeing more new lows than new highs, but they're getting less on the NYSE. Maybe we're improving there. If we look at the right, this is really, really a powerful tool. The gray would be what we saw the day before, but up here, how many sectors are positive? You could see they were all positive, the S&P 1500, in the NASDAQ and the NYSE. You could see the day before the numbers positive were much lower. How many industries were up? 96 in the S&P 1500, 90% in the NASDAQ, 95 in the NYSE. You could see compared to a day before, massive change. And how many stocks were up? 91% in the S&P 1500, 90% in the NASDAQ, 71% in the NASDAQ, and 84% in the NYSE. A very powerful day in the markets Friday, but was it just a bounce? Technical oversold bounce. If we look at how many stocks are above the midline of the Bollinger Bands, why is that important? Because in a bull market, stocks will go from the top of the bands to the midline back to the top. In a bear market, they'll go from the midline to the bottom, back to the midline, back to the bottom. So I'd like to see more than 50% above the midline if the market's strong. We're at 22, 23, and 30. The market is not strong. This tool will update during the day. You just hit refresh and it updates pretty darn fast within a second or two. It's not going to update here because it's already the weekend. Yay. Over here, one day change on the sectors. S&P 500 sectors, super strong. They all were positive, led by tech, energy, and financials on Friday. Tech, as you'll see, was actually down on the week, but had a really strong day if we just look at on Friday. I have themes. So what was leading on Friday? Blockchain, software, data centers, China, energy exploration, cybersecurity, cloud computing, semiconductors, leisure, cybersecurity, robots. Boy, it feels so much like 2024. A tech-driven day. Clearly not what we've been seeing. All right. If I want to see what the week did, I come up here and I could look at the 5-day change on the week, and you could see volatility was up a bit and the major ETFs. Russell led only down 149 and diamonds were down 3%. If we look over here and do the same thing, we can see that to the downside, discretionary, staples, and services. So even those staples are defensive. They still had a horrible week. The only things up were utilities and energy, which I mentioned in the PowerPoint. really a tough week in the markets. And if you look at what was down theme-wise, cannabis, retail, transports, leisure was down on the week, home construction, telecommunications, millennial, blockchain, cloud. So a very big difference between Friday when you can see the one-day change and all these things here are green, and these were all the big losers in the week. All right, I get a lot of information on that screen. Like I said, it updates intraday. You just hit refresh, probably about a 5 to 10 second delay on the prices near real time. And then I leave this on one of my monitors. Now, I always like to go to the timing brief, which is my market timing model. And just if you look at this thing on the bottom, that is the buy-sell signal. What I really like about my timing model is when we went positive in the model, which would have been November 6th, we stayed positive until we went negative in January 6th of 25. So we were positive the entire year of 24. That would have kept me in and did keep me in the market and riding a great rally. That was the leading, and I usually look at the S&P as my main determinant. The Qs, but if most of the year, you can see the Russell's been in a sell for a while, and the Dow just went to a sell. For the weekly ETFs in this model, all of them are in a sell right now. If I look at the daily, all of the daily are in a sell right now. We have a long way to go to recapture that WMA. So this tells me don't get too enthusiastic yet. And I've done this long enough that I'll play short term, some nibbling, but I'm not going to commit my reserves and my cash to any great extent until I start to see these turning into a buy signal. Right now, all I could say is that was a powerful day on Friday, and we'll come back to it. Now, for some long-term position holders, one thing that I'm a little concerned about is we're starting to erode. The bongos have turned red, meaning the trend has turned down on each of the monthly ETFs. We still have a ways to go to that WMA, except in the Russell, which has already entered a monthly sell. So I don't see anything here that says get excited and get ready to buy. I am excited. I am ready to nibble because I'm shorter term than a monthly or weekly guy, but I don't see a reason to commit my reinforcements of my cash and buy. Nibble might be okay. I like to look at the major U.S. markets. So here they are as ETFs. Let's look at each of them quickly. The spiders, you could see pull back. What does this look like to you? Are we building a bear flag and then we break down? I think that's very possible. Massive day on Friday. I get it. Let's look at the weekly candle. Nice reversal with a great bottoming tail right at the 50 weekly. I think short term, like others, this thing is going higher. The question, will it go up? We didn't activate that yet, so let me go through it here. Will it run up to the 200 and fail and then come back down? I think that is my base scenario. Will it run up to the 50 and then fail? That is not an unreasonable scenario. You could run up to either of these and go sideways, or does it break out to new highs from here? I think that is highly unlikely. So I still expect a run up whether we fail here or we fail here or we fail at the 17. I don't know. You could probably even fail around here, which is the site where we came down to before. So I am in the camp that this is an oversold bounce in the setting of a larger down market. How will I be convinced that I'm wrong? We come up here and we pull back and we start doing this. Would be great. Set up for a new rally. But right now, I am still thinking the lesser resistance is to go lower. And you're going to see similar when I look at the other ETFs as well. Let's close that down. If I look at the Qs, it's the same pattern. I mean, are we forming a bear flag here and then going lower? Do we run up to the 200? I think there's a good chance of that. If we like Powell, maybe we run up to the 50. But I'm really going to be looking for failure at each of these moving averages. Diamond's the same story. The Russell has fallen the most, way below its 200. And is it setting up here a kind of a bear flag as well? Maybe. This may have been the volatility crush that we saw, or the big volatility move. This would have occurred a couple days back. If we look at the weekly on the volatility and everything else, let me just hit this to weekly. Actually, I got to turn off my drawing tool. Okay, there's the weekly. You could see on the weekly, volatility actually came down quite a bit this week. There you go. So volatility came down 7%. Again, look at these weekly candles. These are hammer-like candles occurring at an area of potential support. Hence, the enthusiasm that the market might go a little bit higher. The VIX peaked and now it's coming down. When the VIX is high, it's time to buy. It kind of got high. Nothing close to this candle. And the dollar remains our friend as it's low in the pattern. This is the weekly. Okay. If I go and look at commodities, gold remains on fire, and it's one of the leading industry and sectors right now are the precious metals. You can see gold gave up a little bit on Friday. It was down. It was actually up 0.06 after trading higher early in the session. Actually, you can see the silver was down just a bit, 3.03, so kind of a flat day on both gold and silver after nice run-ups, and you can see both at recent highs. Oil kind of looks like a bear flag, but setting up a triangle here lower in the pattern. It was up a bit on Friday. Natural gas reversed. I mean, this thing has beautiful run-up and has pulled back. We'll see if it goes and break back above the 17. It was up 0.34. And then let's just go to the weekly and comment on the 10-year and the 30-year. You could see the 10-year was down, it was up 0.15 on the week. Is that correct? No, it was down 0.21. I have to highlight the right thing. I'm sorry. That's why it's right. It was down 0.21 on the week percent, and the down 0.02 on the 30-year. So the rates and the dollar are supporting the market to go higher. And so we'll see what kind of a bounce we get out of here. Now the buckets are my tool that I learned from Ian Woodward that helps me understand the ebb and flow of the market. Now, this is a non-committal day. And why? Because in white, the number of stocks up below the Bollinger Bands are 5% in the NYSE, 5% in the S&P 1500, 5% in the NASDAQ, and interestingly, 5% as well in the Russell 2000. So we have very few stocks below the Bollinger Bands. We have very few stocks above. It's still what I would call left shift, where most of the stocks are in the lower half. We know that from the percent B on the markets, the stocks above the 50% perspective. But this was an improvement. So we came off the severely oversold. The market breadth tool, this tool had a signal that's important that we got on Friday. So let me tell you about it. First of all, on Tuesday and Thursday, we had these green dots, which are called bingos. And the bingos are the baby out with the bathwaters. You see these as markets are falling. As we talked about on the daily videos, the stocks on both the NYSE on the left and the NASDAQ, stocks above the 20, 50, and 200 had gotten to the point where we reversed in the past. So no surprise, we were so oversold, we were due for a reversal. On the NASDAQ, we had this thing called the Eureka, which is that greenish white line. A Eureka is a sign of exuberance. They often occur at the bottom. So that's one reason to be excited if you think we're going to new highs. I think you get those as well when you're having a bit of a bounce in a pullback. And remember, for those that are new to trading, rallies in a bear market, rallies in a downtrend can be ferocious incredibly powerful, and then they fail. Down here, another piece of good news is we have three things here: the new high, new low, advanced decliners, and the up-down volume. We know the new high, new lows are going to be red, but notice that the advanced declines turned positive and the up-down volume was positive. So there's some green shoots here. So maybe I should get more excited. I am excited. I am excited because I think the market's going to run up to at least this point. It could run up all the way here or here, and then I'll reevaluate. Frankly, I'll reevaluate every time I look at these charts. But if we can get a run up and fail at a higher point, it's a great place to short. And again, if you still have long positions and you think that the market rally here is going to fail, you'll have the ability to raise some more cash at a higher price, which is good. So I've now looked at the markets. I've looked at them multiple different ways. I think my tools are really good at calling tops and bottoms. And one of the tools that I also supplement it with is Sagar's tools. And I just wanted to show you the ETFs for the U.S. markets using Sagar's tools and a few other things of why I was pretty convinced that a bounce was at hand. Down here is the high-low jump. And the high-low jump was minus 100 at the end of the week before we bounced on Friday. That was telling me that across the markets, the S&P, the Qs, the diamonds, and even the Russell, we were at a point where we had the most extension to the downside as we had in a year. Typically, that's a point of reversal. Here is the percent Bs, if I remember correctly. Let me get my colors right. Yep, the percent B of the stock market. And just like on an individual stock, when it gets below the bottom, you expect a reversal, and it pulled back to a pretty low number across the board here. And then the RSI had gone from negative to positive, or had reversed higher after hitting a pretty low number. So we had a lot of confluent things saying we're probably going to bounce. This is I believe, a headwind signal from my buddy Cigar. We have stretches and headwinds, and these occur at time of direction changes. And so more things that suggesting the market was getting oversold, at least in the short term. So we got our bounce. I still don't know where we're going. Nobody does. I think you have to ask what you think the odds are. And when I think about the odds, which I did, I think last week in one of my videos, I think this or anything that looks like this, is very low, 10%. I think this is probably 50%. And then I think in here and then bouncing around before we decide whether we break higher or break lower is probably 40%. So that's still a little bit of a rally here, another 2 or 3% higher before it breaks down. Of course, with tariff Trump and the tariff temper tantrums the market has every time he breathes a tariff, no one knows what to expect. That does make things much more difficult right now. Now, the other part of this tool is not just to give you a great grasp of the market, but to figure out where to be spending your money. So let's look at the ratio charts. Here I got to turn off my drawing tool. Easy enough. The ratio charts, this is going to be Bitcoin. The rest are S&P sectors versus spider ratio charts. And the Bitcoin's a ratio chart as well. And I'm going to look for what's pointing up to the upper right-hand corner because that's going to tell me where the strength is. The white lines at the end are going to show me strength on Friday. Anything pointing down here is weak. And if there's red lines down here, then that's really bad. So staples led us into the week and sold off as the market had some strength. So you could see weak on Friday. Industrials is getting better. Utilities held up well, while real estate, one of the defensive, and healthcare gave up some. If I want to believe that we got a new bull, I don't. But if I saw that strength in discretionary and strength in tech, I'd be happy. We don't have that right now. Communications weakened. Financials shows they're improving. Up here, Energy is probably the leader right now, and materials, which I think gold is in, and precious metals is also doing okay. This is an hourly chart. I've asked Praveen to add daily and maybe monthly because it'll give us some longer term trends. But for most of us who are trading, it's a short term trend that matters. So now I go into the JAS layout, and I designed this to fit my style of trading. And if you look at any of the other programs that I mentioned earlier, um, and the ones that I've influenced, HDSI is where I learned, frankly, a lot of this stuff. But the others have the same basic indicator set in and the same basic appearance. So top down would be looking at leading industry groups and sectors. Bottoms up would be looking at a big list. I'm going to start with the top-down analysis. I use the JAS list, which includes the NASDAQ, the NYSE, and the Amex filtered for $1 and 100,000 shares. Let's assigned into sectors, and we could see that within my universe, the number one mover was tech on Friday, energy, and financial services. So if I want to be a pure top-down guy, I can take the top three of the sectors that give me 1,193 charts. I'm going to rank them on short-term momentum, and I could start looking at them. This is Rubrik, a technology company. Don't know anything about it, but what do I see here? The weekly bongo is red, so it's been in a downtrend. We know that. The daily bongo just flipped to blue because it's retracing in this downtrend. The relative strength is 55. It's come down as the stock dropped. It had big volume on Friday. You had an EMS signal come in, a CPR, a gap of volume, a breakout momentum, a PSER reversal, strong relative strength, and strong OBV. I don't know anything about this. It doesn't have a high-low jump yet because I bet it's an IPO. It's an IPO. Look at this tail. So this one actually looks interesting. Um, so I might, let's see, okay, I might start adding what I see that I like. I could add this to my long FICO. I like to see it break above this area, so I might want to watch that. Monolithic power, nice move, but way down its level. MicroStrategy. This one is married to Bitcoin. It's a leveraged Bitcoin play. Right now, it's pretty clear it's in a downtrend. A breakout above this high and taking out the 50 would be interesting. Clack. And I could go through this list looking to see if anything has an attractive chart pattern. Root is one I talked about the last couple of weeks. And I thought, wow, look how far this has run. Then I put a monthly on this. And look at where it came from. This is something that came out of the chute on fire and is now based and is coming back. So I wonder, probably be interested in watching Root. And then one of the things that really got clobbered this week was APP, or the last couple of weeks. I think their story is still good. Notice how they almost traded down to this where this gap was, and now they're bouncing. That's another one that I want to watch. So I might, one thing I could do is look at them. The other thing is I built in some scanning. So let's look at, I want the weekly bond go up, so the longer term we're in uptrend. I want to be above the 200, 500,000 shares, greater than $5, and I want my 2-day momentum signal. And I get two stocks show up. One is D-Wave Quantum. It's one of the quantum computers. It had a percentage-wise a pretty massive move. You see this pattern a lot in biotech. Things run up, they come back. The next move up is sometimes interesting. So this might be another one I might add to my watch list. And then NFG, natural fuel gas. What I looked at here, and a couple things that we built into the program. Next earnings is May 7th. That's always good to know. We've got nice earnings growth here. 211 will be against 179. So that'll be another 20 or 30% of growth. You can see the revenue here. I think it's a nice looking chart. You had a bit of a flag here after the run up. and that might be something else I'm interested in. So I'm just going to build a watch list. Now, I have a number of other signals in here, but since I'm not going to advocate buy, 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 buy this week, I'm going to be a little careful in getting too excited about finding stocks that look attractive here because you got to be careful. Now, I could close this. We're back to my universe, which is about 3,500 stocks. Let's rank the industry groups by 2 day, and let's take the top 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Another approach to top down. And so they're already ranked, or they will be ranked, if they're ranked by the FM2, 2 day momentum. And again, I could look at the leaders. Radius Recycling looks like a takeout. Over here, I actually have the news. I thought this was a takeout. Still think it's a takeout. Whether the sale, yeah, this is a takeout. So I don't care. The old price line, booking.com, pulled back to 200. Alta had good earnings, but look where it's at. I mean, I want to find things that are actually uptrends, not downtrends. So I could do the same thing, and I could look for how many stocks have a weekly bond go up. And you can see I got 60 of them. And how many of them have that 2 day momentum? We'll just make it very skinny. And there's two. Heritage Insurance Holdings. I like this one a lot. If we look at the fundamentals, you could see earnings are not to May 7th. And, you know, as I did my review, the insurance companies are what look the best. You can see the blues coming in here. You can see the relative strength, the OBV. Put that into my long list. And then SID, this is a steel company, an ore company, an international one. I did think it was interesting that steel was one of the top industry groups. So what I've created is a top-down tool that allows you to scan by whatever you want to scan. Now, if you want to live in the S&P 500, you can do that. And that's going to change the numbers. And if you look at all the stocks that I have in here, let me take off my scan. You're going to have the 500 stocks in the S&P 500. So you can be whatever you want to be. Let's go back. If you want to be the S&P 1500, why is that only? Oh, because I didn't highlight them all. And there's your 1500 stocks in the S&P 1500. So you control what list you're looking at by the top, and we automatically put them in their sectors and their industry groups. Now let me show you from the bottoms up. Let's see if we can't find a couple of stocks that look interesting before I say goodbye. If I go out of the top down, I go into the impulse, I see all the stocks. And let's run that scan I was doing. Let's look at, this is my favorite. Weekly bond go up, price above the 200, volume over 500,000, price greater than 5, and my 2 day momentum up, and we get a couple. Exelon, this is a utility. Nice uptrend, pullback, getting ready to go higher. That one looks reasonable. MRCY, I like this one a lot. It's a little loosey-goosey. Big gaps up here. Gapped up here. Was that earnings? It was February 5th. Let's open up the earnings tool. And you could see that was after earnings. You've had big earnings per share growth. We're going to have 6 cents versus a 26-cent loss. We're going to have $20 of revenue or 20 million of revenue. So it's a small company versus about 20 million. This is about earnings per share growth. Uptrend, pull back to the 50. I always like that pattern. We looked at NFG already. We looked at Qubits, and then TGI is Triumph Group. That looks like a buyout. And again, you can always open up the news. Sale of Triumph Group is fair. So that's a buyout as well. So I have a number of different signals in here. I can unplug the 2 day momentum signal, which I think, where is that signal? Price above. Oh, it's here somewhere. and I could look at other signals that I built in. But again, I don't want to build a massive list of stocks that look attractive. I've already got plenty, and I know from my top-down um, review this weekend, looking at 1,000 charts, that APP is one I'm watching because of looking to reverse higher. Everybody loved it at 500. It's even nicer looking at 292. Root is a big leader. The RBRK, nice move on Friday. Natural fuel gas looks interesting. It's a natural gas play. Um, I think there's a smattering of things to look at. Again, where is the market going? That needs to be your number one question. Because if you believe we're going to all-time highs, then go margin and go up the wazoo. I do not think that is the correct approach. I don't think that's happening here. If you think we are going to go up and then fail at a higher point, use that to prune off your longs. I think we're going up and then we're going to fail. I can make money for a couple days to the long side, so I might do some nibbling, but I think the better part of valor here is to be very careful, and we'll see you in the top-down trader room with a video and commentary after the market or maybe during the market on Monday. Have a great weekend, everybody. Thanks for visiting.